Hey everybody, happy Friday. I'm hoping you had a great weekend. You enjoyed the sun, the rain, the hail, the snow, the sunshine, the fall colors, the earthquake. Anyways, if you don't like that, I know it's not for you. Hey, I got quite a few things for you this week. First of all, let's talk about DSCR loans. So debt service coverage ratio loans. Basically, what this is doing is this is allowing a borrower to purchase a house with pretty much no income documentation, as long as the rental can cover the debt. So as long as your rental, and we do it by a rent market analysis, the appraiser does it, covers the principal, interest, taxes, insurance, and HOA due payment, you're good to go. It's really pretty that simple. And you don't bring in any other income documents. You don't bring in paycheck stubs, W-2s, tax returns. You have to bring source and seasoning of assets, of course. But let's say hypothetically that somebody is on Social Security and they're making $2,000 a month, but they may have like $300,000 in the bank. We can use that money in the bank for the down payment. And as long as the rent covers the debt, you're good. That's it. It's really simple. We just closed one this week on Wednesday. It went through smooth, a couple appraisal issues, but that's just the appraisal side of it and the house side of it. But debt service coverage ratio loans really are really great loans. Interest rates are really not that astronomical whatsoever. You can get them into the sevens right now, depending upon how much you put down in your FICO score. So we do look at FICO scores, but really DSCR loans are spectacular. Hey, let's talk about rates real fast. Rates were flat this week, maybe a slight improvement, but we're still in the sevens. Inflation actually came in about what was expected this week, and a lot of the economic numbers came in what was expected this week. But what really hurt this week was the fact that the federal government is adding $1 trillion of debt every 100 days to the industry. And so when they add $1 trillion of debt, they've got to sell $1 trillion worth of bonds. And the appetite for government bonds isn't really that high right now. And so those rates are, to sell those bonds are going up and up and up to entice people to buy those bonds. Well, if those bond rates are high, that means, your Fannie Mae, Freddie Mac bond rates need to be high, and that's just keeping rates high. So until we get a little bit more great economic news about the economy crashing, the economy's got to crash in order for the rates to go down, or we get inflation under control, the news about $1 trillion every 100 days is pretty shocking. Let's talk about marketing. Everybody should be marketing. You should be social posting and Instagramming and video and marketing. So one of the great marketing techniques out there is doing Facebook Live. Facebook Live is actually fairly easy to do, but you do Facebook Live and you just answer questions. And so some of the times you could have you and your friendly neighborhood loan officer, me, there, or you can have maybe an appraiser there. And what you do is you just go Facebook Live for 30 minutes. You tell people ahead of time, and then people put questions in the chat box, and you answer those questions. You can answer questions about financing, about real estate, about what the market's doing. It works great, and it's really a great way to do it. Now, you got to be consistent about that. Now, with that, there was an evil rumor that a lender was putting out there that mortgage brokers cannot do Idaho housing loans. They're lying. I do Idaho housing loans. Mortgage brokers do Idaho housing loans. Sorry to get on my soapbox, but I am going to get on my soapbox. Matter of fact, I'm the #1 loan officer in the state of Idaho for Idaho housing loans. Hey, with that, I hope you guys have a great week, no matter if it rains, snows, hails, grapple, or we have an earthquake. Take care. Go Broncos.